Hi folks, welcome to another session of Investment Income for Life. Before we proceed further, please do me a favor. Help to click like and subscribe in order to support the making of more of such contents. Thank you. I thought that Keppel DC REITs produced a very decent set of Q3 2023 financial performance despite the higher interest rate environment. Its gross revenue increased by 0.5% to 70.67 million Singapore dollar relative to Q3 2022 revenue of 70.32 million Singapore dollar due to the recent acquisition as well as overall positive income rental reversion and inbuilt yearly income escalations. We can see that net property income actually increased by 0.8% before accounting for the finance costs. Finance costs has swelled by 56.9%, which is an increase of a whopping 4.7 million Singapore dollars for Q3 2023 relative to Q3 2022. Overall lower distribution income and DPU were mainly due to higher finance costs as aforesaid mentioned as well as less favorable forex hedges. The portfolio occupancy of Keppel DC REITs is at a healthy 98.3% as at September 30, 2023 and once again demonstrated the resiliency of its business. Next, the weighted average lease expiry of its tenants is at a lengthy 7.8 years, which is one of the longest in REITs. The only risk here is if any of its tenants such as Sixtra encounter business failure and declare bankruptcy. Saying that, it has a well-diversified tenancy base with only one customer making up a significant rental income contribution of 34.4% as at September 30, 2023. Note that this customer is one of the largest tech companies globally and in internet enterprise. As for aggregate leverage, Keppel DC REITs is at 37.2% as at September 30, 2023 and its average cost of debt is at 3.2%. There is another 182 million Singapore dollars before reaching Keppel DC REIT's self-imposed internal cap limit of 40%. There is also no further refinancing for 2023 and the bulk of its debt only expires from 2026. In addition, 72% of its debt are fixed through interest rate swaps. Keppel DC REITs has a very strong global diversified portfolio with 70.9% of its 3.7 billion Singapore dollar assets under management in Asia Pacific and another 29.1% in Europe. Furthermore, it is interesting to note that Keppel DC REITs has more than 2 billion Singapore dollars of potential data center assets in its pipeline for acquisition from its sponsor. Over the past 8 years since Keppel DC REIT's IPO, it has been steadily driving its portfolio growth through various acquisitions as denoted in the above slide. Keppel DC REIT's current annualized distribution yield of 5.16% is rather attractive given the huge potential of further acquisition and the resiliency of its business. Summarizing, while I thought that the Q3 2022 results of Keppel DC REITs is decent and better than my own expectations, the market appeared to think otherwise and its price dropped by 3.98% to 1.930 Singapore dollars per share as at October 17, 2023 12 p.m. Personally, I think that strong unit pricing will continue to pave the way for another M&A acquisition in 2024 to continue on its growth path. That is all for today folks. Have a great week ahead.